Welcome back to the Catalyst Clock. Quick note, not financial advice, we're not licensed advisors, this is educational analysis only. Short sellers just increased their bets against Tesla by 33% heading into today's earnings call.
Right, and normally that's a sign people expect bad news, but Tesla just delivered its strongest quarter in a while, 480,000 vehicles, up 25% year-over-year, so who's actually right here?
We find out in a few hours. Let's break down what we already know before the numbers drop. Start with what's already public. Tesla delivered 480,126 vehicles last quarter, up 25% from a year ago, and up 34% from the quarter before that. That's genuinely the strongest delivery number they've posted in a while.
Energy storage jumped to 13.5 gigawatt-hours deployed, nearly double the 8.8 gigawatt-hours from the quarter before. That side of the business barely gets talked about, but it's growing faster than the cars right now.
And Wall Street's expecting $26.2 billion in revenue tonight, with earnings per share somewhere between 50 and 55 cents.
Here's the part that should temper the excitement, though. Last quarter's operating margin came in at 4.2%, down from 5.7% the quarter before. For every $100 Tesla brings in, they're only keeping about $4 of it after costs.
And on top of shrinking margins, the CFO just raised this year's spending plan to over $25 billion, up from an earlier $20 billion estimate, so they're spending more while keeping less of each sale. That's the tension the market's actually pricing.
The stock's already down 16% this year because of it. It's trading in the high $370s heading into tonight, with options traders pricing in a swing of over 6% once the numbers actually land.
Now here's where it gets interesting. Tesla's robotaxi service just expanded into Orlando and Tampa, adding to Miami, where it launched without a human safety monitor in the car for the first time.
That's a real milestone, fully autonomous, no backup driver. Meanwhile in Europe, registrations are up 57% year-over-year, which quietly undercuts the narrative that Tesla's losing ground everywhere. It's actually gaining fast in at least one major market.
And a regulatory overhang just cleared too. The safety agency closed its long-running investigation into nearly 700,000 vehicles over braking issues, concluding a software update already fixed it.
So, strongest delivery quarter in a while, robotaxi genuinely expanding, but margins compressing and spending rising at the same time. Where does that leave us?
I'd call this a 6 out of 10 heading into tonight. The delivery and robotaxi story is real momentum, not hype, but the actual investment case now hinges entirely on whether margins stabilize tonight, because right now the market's paying premium prices for a company whose profitability is moving the wrong direction, with short interest up 33% right before the print. A genuine beat on margins could trigger a sharp move either way.
This is a watch the call, not the headline earnings report. Deliveries already told half the story, margins tell the rest.
Funny enough, one major bank just said something worth remembering. They'd rather own Alphabet than Tesla heading into this earnings season, two of the most watched stocks in the market, reporting back-to-back, and Wall Street's picking sides.
We'll know which side was right by tomorrow morning. Subscribe for the full breakdown once the numbers are in.